Well, joining us now is financial strategist Steve Cotton, who brings now more than 48 years of experience across investments, business, government, and public affairs. Now, Steve is here to break down some new forecasts warning inflation numbers that could climb to maybe 6% and what that means now for us consumers. Steve, as always, pleased to have you back here on the news desk with us.
Thank you. It's an honor to be with you.
So, Steve, economists now are projecting inflation could hit 6% in the second quarter. In plain terms, how serious is that number compared to what viewers are used to?
Well, I think it's a real potential. I think the closure of the strait has resulted in spikes of oil prices as we have rumors of some kind of a potential deal, which may be real, may be illusory. I think inflation is going to stay high because of elevated oil prices, and that permeates throughout the whole economy. It affects the globe, but also affects us here at home because so many of our products are made with petroleum products of one kind or another. Fertilizer affects food costs. It all ripples through the economy. So I think 6% is not out of the realm of possibility. But that's still a lot better than Joe Biden's 9% during his years.
Are we seeing, you were talking about a deal that's possible on the table right now. Even if that deal were to be made tomorrow at the earliest, are we still seeing possibility of inflation still climbing as the summer continues on?
I think so, because there's a lag effect. You know, if they announced a deal tomorrow, shipments have been held up in the Gulf, bought it at previous prices. There's going to be a lag effect before you start to see any kind of relief at the gas pump and any kind of relief in terms of food costs. And that lag time could be as much as 2 months, 3 months.
You know, everyday items, what should consumers expect to feel the most pressure on with this inflation? Of course, fuel, we obviously know that, but I guess food, and that can probably creep into rent, I'm guessing, as well.
Well, it certainly creeps into our food costs. It really affects fertilizer, which affects food costs, food production. Obviously, it affects diesel, which affects the truckers. It affects the airlines. There's not much that global oil and gas prices don't impact, even though we're an oil and gas exporting nation now.
Mm-hmm.
So I think it's hard to pinpoint every sector where there's an impact, but there is. There's even an impact on home building because of the costs that are escalated in home material building products, copper, wire, all kinds of things.
You make a good point, Steve. The people I talk on the streets with, they say we make so much oil in this country, we could be self-reliant, self-dependent. But we're putting that oil out on the ships and they're sending it out too. So why aren't we just keeping our own oil?
Well, we have trading partners. A lot of the countries that used to get their oil from the Middle East have diverted their tankers that were outside the Gulf, and they've diverted them to coming into the Gulf of America, and they're unloading American oil and liquefied natural gas. So some of that's political, some of it's purely economic, some of it's short-term supply. The real question, I think, is whether these countries will go back to Middle Eastern suppliers once this crisis is over. And if the Iranians maintain a militancy and maintain a public position that they can close the Strait of Hormuz at any time of their choosing, they may permanently lose some customers.
If energy prices stay elevated, Steve, does that make inflation harder to bring back down?
It absolutely does, because the Fed right now is in a wait and see mode. There are even some people saying that if inflation is seriously elevated, the Fed might go from cutting rates and holding fast to actually increasing rates. Now, I don't think there's a case to be made for that yet, because I think these inflation spikes are temporary and I think they're situational. I don't think we're seeing structural inflation. I think it's more situational. However, there is a faction on the Federal Open Market Committee among the Board of Governors of the Federal Reserve that says, well, maybe they need to look at a slight rate increase next time. And I wouldn't take that off the table. I think anything is possible.
What's the risk if the Fed waits too long to act or if they move too aggressively?
Well, the Fed is usually late to the party. That's the sense in the industry. The Fed tends to react to things. The greatest concern I think the White House has is the Fed has been very tardy in lowering rates, which retards our economic expansion. It costs, makes the debt more costly. If we had a runaway inflation situation and they were late to curbing that with interest rate hikes, they'd be criticized for that. So, the Fed's in kind of a no-win situation. President Trump has wanted them to cut rates for years, much more quickly. His nominee, Kevin Warsh, has been known as someone who believes there should be federal interest rate cuts, but I think the economic numbers and the situation are going to cause even his new chairman to keep rates where they are. And I think he'd be one of the last ones to call for a rate hike. But if we have a rate hike, that's intended to dampen economic activity. We could see unemployment tick up. We could see businesses moderate their capital expansion. Nothing good comes from a rate hike.
Yeah, I don't think that Mr. Warsh wants to have a rate hike since that would be the first thing he does in office once he's newly installed. And Mr. Trump said he wanted these rates to go down. Forecasters now, Steve, say inflation could ease later this year toward the end of 26. What has to go right for that to happen?
You mean for inflation rates to go back down?
Yeah.
Well, if there is a reasonable Middle East settlement with the Iranians, and let me add this point: it's hard to know what's really happening on the Iranian negotiation front because publicly they say one thing, privately they say the other. The Iranians are masters of lies and deception and manipulation.
Mm-hmm.
Their goal is survival of the regime, and they may commit to something or imply that they're going to agree with something privately, while at the same time their spokesman is denying they're even close. And that's what we're seeing now. Trump is, as always, playing three-dimensional chess, and there's some psychological warfare going on too. So, but if we're going to see inflation come down, it would be based on a really good, solid negotiating deal that would be enforceable with our forces staying in the area. The Strait of Hormuz would have to be open immediately, and that's one of Trump's non-negotiable demands. And if that happens, you'll see oil prices fall sharply, and inflation will follow that. Just there will be a lag time. So there could be a real good outcome here, but I just think it's too soon to predict because I think this can frankly go either way. And the thing we don't know, Jay, is whether all of this public discussion about negotiations is cloaking some covert activities designed to take down the regime. And I hope we and the Israelis are working on that because that's the only long-term solution, is a new regime that's pro-Western, that is not going to hold the rest of the world hostage.
What does this elevated inflation do to our 401k savings plans?
Well, there are some equities, parts of the equity market that benefit from inflation. There are certain types of inflation-protected bonds that benefit from inflation, that tick up. I think there is a lot of good wind underneath these economic sails right now. Let me give you some examples. Congress just passed $1 trillion defense budget. The administration says they're going to come back with a $200 billion supplemental appropriation request. And the requested defense budget for FY27 is $1.5 trillion. This in and of itself has huge long-term ripple effects to the positive in terms of economic growth, all the military subcontractors, all the related industries and contractors and businesses, small and large. In addition to that, you've got the Trump tax cuts. He's added no tax on tips, no tax on overtime, $6,000 tax credit for people on Social Security under a certain income level. And not to mention 18 to 19 trillion dollars of new foreign investment coming into the country. That was, remember, his Middle Eastern tour. There is so much potential growth stimulus in the economy coming in the pipeline that I'm really not worried about a recession. And I'm not particularly worried about inflation, because I think as soon as this is over, oil prices are going to fall sharply and they're going to stay down.
Okay, good. Finally, some economic signals that viewers should be paying close attention to over the next few months. Energy prices, jobs, consumer spending. What should we be looking for?
I think we always start with corporate profit reports. Corporate profits have remained pretty strong. Unemployment has really gone down to about 4.0, 4.2, which the statisticians claim is effectively full employment. You look at the labor participation rate, you look at consumer confidence. Consumer confidence has been down a little bit, but it will tick back up. Business is strong, the economy is pretty strong. We do have inflation and we do have people that are struggling to pay bills, but 401ks and the markets and the investment community is at very high and very strong levels, and I think that will continue. I think the economy will strengthen through the end of the year, particularly if there's regime change. Now, I am cautiously optimistic, but I emphasize cautiously on regime change. But the Iranian people are fed up with this theocratic militaristic regime. It's brought nothing but disaster and economic hardship on the country. And I think if we were to see regime change, I think you would see such an economic expansion in the Middle East, peace, more companies or countries signing up with the Abraham Accords, as Trump has suggested. We are on the verge of what could be the longest period of peace, long-term peace in the Middle East, but it's got to come with regime change. That's the first prerequisite.
All right, Steve Cotton, thank you so much for the insight today. Sure appreciate you.
Thank you, Jay.